Hello guys, good morning. Today is Thursday, September 29th. I'm going to be making a little bit of a resume in today's price action. We're going to begin with the bias, what I thought it was going to be and what it ended up being. I thought it was going to be bullish, right? We had a pretty impulsive move yesterday throughout Asian session and basically a little bit of the PM session of yesterday's price action. It started going lower, London went low, midnight went lower, London went lower, and also we have a little bit of buy-side liquidity, sell-side liquidity being created here as an example, which also goes with this. We have the Fibonacci on previous day's move, right? Aggressive move higher that has a little bit of an order block here in the 5-minute, if you can see right there, right? I wouldn't really consider as much, but well, it's just something to have as a little bit of an extra. Price takes the sell-side liquidity, mitigates to 50%, goes aggressively higher. 5-minute market shift, fair value gap, and this would have been a lovely entry to take through London session. I wouldn't know for sure if it would have given us a lower time for opportunity. We can check that later. But basically, I thought the bias was going to be bullish, and it continued to be bullish throughout the entire session. And how could we determine that? Well, again, basically, we have that yesterday we had major lows being taken, sell-side liquidity, tiny sell-side liquidity being taken yesterday early in the morning as well, and through midnight in London kill zone, then aggressive move higher, and all of this was simply a tiny bit of a retracement. And as you can see, even this price getting pretty close to around the same level that we saw on previous day's high, right? Just creating some buy side liquidity for price to later take. So we have multiple reasons to believe price could continue to go higher, and that's the reason why I was bullish for the day, right? Now jumping into the trades of the day, I didn't take any trades today except 2 on paper trading. As I mentioned, I'm not trading on funded or challenge trading this for the rest of this week. Probably starting next week around half or something like that. Depends on a couple of things. And besides that, I would have not taken any trades today on challenge or funded accounts because we didn't really have anything in a very clean manner as I usually look for the trades, right? So we'll analyze a couple of things that we got throughout this session, which is this from 7 to, well, I put it to 11 because lately I've been seeing prices working out quite all right through 11 as well. So yeah, let's actually look into this London trade first to see if it would have worked out or not, because it was a pretty clean opportunity in my opinion. And yeah, I mean, we have the market shift above this high or above this high, whatever it was for you. It would have been better to count it at this one because the fair value gap happens here, as you can see, and that would have been a lovely trade to get into. Stop loss of 73, 74 ticks, and target wise could have been difficult if we're expecting this entire thing to be impulse, retracement, impulse. Well, we could have easily aimed for this high, but we're talking about 13R, which would have been difficult to hold, sorry, but definitely would have been taken, as you can clearly see, and would have been a lovely trade. Otherwise, we can go up to this high, which would have been a nice 3.7R, or further than that to get at least 4R, right? Still above this high, 4R would have been fine as well. And yeah, lovely trade again. 5 steps overall. Let me actually open the notes. So we have the run and stops below these lows, the 5-minute, 15-minute market shift displacement, right? Let's look at it from the 5 and closer. So 5-minute market shift above this high, fair value gap as well after taking sell side liquidity, also again mitigating the 50% of previous move, and then the lower time frame entries, right? Simple as that. Now through New York kill zone, price continued going aggressively higher, started going aggressively lower, and here's when it got a bit complicated because ideally we would have seen this entire low being taken, right, a sell side liquidity, but actually what ended up happening is price taking just that low, right? And I was okay with that because I did say through Telegram that I was interested in seeing price after the market shift as it created a very nice fair value gap, but as you can see, price actually does not come back down to mitigate it, right, to trade into it. So there's not much that we could have done about it, right? I would for the lower time frame entries if price was to mitigate this. Price didn't come back down to that, so there's nothing that we can do, honestly. Now we do have this. Could have we looked for lower time frame opportunities up here, counting the market shift to be this? Yes. What was the issue for me? Sorry, this is the market shift. What's the issue for me is that we were pretty high up on this. Actually, it's not the way that we put it, and it's on the other high, just like that, right? We're pretty high up. Entries could have still worked out if I remember correctly. I actually didn't get any entries, but well, yeah, we kind of do. This could have been an entry. This is one fair value gap. This is the second. This is the one that we should have taken with the stop loss below this low. And as you can see, it starts well, takes previous day's high, retracement, sell side liquidity, continues with the trend, right? Trade that would have been complicated to hold, right? Because we're talking about being mitigated here. Well, actually here. Stop loss down here. That's 118 ticks. So 22 should be all right. It peaks at 2.6 R. And I mean, ideally, this is exactly what we would have targeted today, being bullish, right? Previous day's high is as far as we would have gone with it. So it is a little bit complicated for me to take a trade that high. Reason why, if it would have happened lower, it would have been a much better entry overall, right? But it is what it is. There is an opportunity there that we could have taken advantage of. Honestly, if I was to go with this lower fair value gap, right, this one, I would have not held it enough to be triggered here. But as you can see, the risk reward ratio changes a lot. But also at the same time, we're talking about taking a buy after previous day's high was taken, which is what we would have targeted, and theoretically expecting the trend to continue, right? Which, I mean, it's definitely possible, right? We do have, again, I'm believing that this was a pretty good reversal to see the rest of the week being bullish. It's definitely possible. So we could have expected the price to just continue to go further than that, and maybe thinking about holding the trade through today and just keeping it to tomorrow to see if the trend continues. But I would have not done that. And honestly, it would have been, again, complicated trade to hold after this aggressive move lower, after the fact that we took previous day's high, and the fact that it does take 53 minutes to be triggered, right? So it is what it is. Now, on the other hand, we do get something here. If we look at into the 15-minute, remember that the steps, if we want to call it that, is run and stops, and then 5 or 15-minute displacement along with the market shift. If we look into the 15-minute, what is it that we see? We have the run below this lows, which in my opinion, in this time frame, we do not get run on liquidity, right? Ideally, what should we be able to see? Can we see a couple of lows that is later taken as liquidity down here? We definitely can, right? We see how price respects this level, starts going a bit higher, respects the level again, approximately around the same level basically, and then goes aggressively higher, and then aggressively lower, taking all of that, right? We can see the liquidity. We later can see the aggression along with the market shift, which generates a fair value gap. Now, as an example on this one, it is a bit more complicated because of two things, right? In my opinion, the market shift would have been this, which means that my fair value gaps would have been both this one, right, from this high to this low, and this one as well, right? This is where we could have looked for the later the lower time frame opportunities, right, which we could call step 3 and 4 to then execute on 5. Now, my problem with this again is that we don't really see a run and sell side liquidity. If this low was taken, then we can see clearly the low is taken, then we see the aggression, the market shift, and the fair value gaps, right? So when I'm trading like this, I like to see everything happening in the same time frame, right? So if I say that I want to see run and stops to then see 5 and then 15-minute displacement, if I see 5-minute displacement and a market shift after a high on a 1-minute time frame, as an example, was taken as liquidity, that is not good enough for me, right? If a high or a low that I'm counting as liquidity is only visible in the 1 minute, and I'm seeing the market shift and fair value gaps in the 5-minute, that for me is not really good enough, right? Ideally, again, we see the high or the low happening on along with the market shift and the fair value gaps happening at the same time frame, right? I can't say, so there's a tiny bit of a low in the 1 minute, price takes that, then the 5 minutes places higher and creates, well, this places higher and creates a market shift, right? I cannot use that. So in here, I did consider and say, okay, so in the 5 minute, we can see these lows, right? These lows are taken as liquidity. Have a tiny bit of a reaction here, which is also taken as liquidity. So we do have some good confluences to go for it, right? Again, as I didn't have the run and stops in the 50 minute along with the market share and fair value gap, this is not something that I would have traded. And as I mentioned through the Telegram, when this price action was going on, which is after New York, 10 a.m. New York, I was interested in seeing what happened on the buys, right? Because in my opinion, it could continue to go higher. Reason why I ended up taking a paper trade, as we'll talk about now. But at the same time, I said that even if I was trading on Thunder Challenge this week for the rest of the week, for the remainder of the week, something like that, I would have not taken them because it didn't make sense for me, right? It didn't make sense for me to be risking capital that late and with a complicated bias overall, and maybe without having this, right? Without having this, because this should happen in the same time frame as this, right? So moving forward, what do we get when price actually trades inside that fair value gap in the 15 minute? We have that there is a lot of sell side liquidity below this low, and below all of these lows, as you can see, price respected almost over and over and over and over until this price goes aggressively lower. Then it kind of respects this for a little bit, takes a bit of time, then aggressively lower, and then it reacts. Now, there's another issue with this one. Usually, what is it that we should see? This would have been the market shift, this should have been the aggression, this should have been the fair value gap, stop loss below low, and that's what we trade, right? Ideally, we see that happening. Ideally, we see, as an example, just like this. This is the, let's suppose this is a fair value gap, trace into it, causes a market shift, fair value gap, right? As we have the mitigation here. It does it without really mumbling or rambling around before actually getting to the point. Now, let's suppose we still wanted to analyze this price action and say maybe we do get an entry later on. There's no fair value gap when going higher. You can check the 1, the 2, the 3 minute, the 4 minute if you want. You're not going to find a fair value gap. And then price goes aggressively lower, takes a little bit of liquidity, still within the margin of this entry, right? Tiny bit of a move higher, move lower, aggression higher. You can see market shift here or here. I don't think, well, it actually does get a tiny bit above that high. So this could have been market shift in every way. And then this is the fair value gap, and that's where I took the buy, the only buy that I took today, right? And we'll also talk about the sells that I took in both of this. Oh, no. I didn't take this buy. No, this is the buy that I took. So this is just the stop loss, which Trading View calls us at a buy. So again, not a ideal trade. It makes sense why it ends up working out and everything. But again, this first structure that then takes as liquidity and then gives us the entry is something that I don't really like seeing, right? Something that I don't really like at all, and doesn't really make that much sense for me to take something like that. Complicated price action already because of this, right? Because theoretically the 50 minute doesn't really have a run stops. It does have the market shift and the fair value gap. That's definitely, it is in favor of the trend. So we do have those extras or those really good confluences overall. But if we don't have this, I cannot trade. Right? If I'm missing one of these 4, I can't trade. So it is what it is, right? So I don't think I would have traded this in any way, right? The buy in any way, but I can't really say for sure because again, I didn't participate on them while they were happening, but it is what it is. Now let's look into this. We have a weird structure. Let's move this. Let's hide the executions for a bit. We have this structure, right? Price kind of ranged a bit pretty close to previous high, which in my opinion just builds some buy-side liquidity. Buy-side liquidity. Price goes aggressively higher, it takes all of that. What does it do later? Aggressively lower, it takes sell-side liquidity. And as an example, when I saw the first couple of moves, this little bit of an aggression here, and I was like, cool, we could get a fair value gap, right? Or maybe, and when this was created, also fair value gap and the market shift for us to later look for lower time frame opportunities, right? And I was really interested in this. And we get the market shift, we get a tiny fair value gap on this, a better fair value gap on that one, but price doesn't come back down to this one. And overall, we do get another break of structure, because at this point, in my opinion, the trend or the market is already bullish, so it wouldn't really be a market shift, it's just a structural market break of structure simply. And price mitigates this 5-minute fair value gap, and that's why I ended up taking the next execution, right? We have taken a little bit of sell side, aggressive move higher, comes back down, mitigates that, right? Mitigates this fair value gap here. That was my first execution. You'll see that there's actually 2 of them, because I put 110 on the first one, which is too low for the rest, so I added to 290, which was still pretty low because it was a 0.629, if I remember correctly, below that low, and target was this high. Just looking for that continuation to occur, right? For that continuation to occur, which basically this trade really just made me recover from those 2 losses. So it's not like it was a lot, right? But well, it's fine, right? Again, this is not something I would have traded on challenge nor funded. I would have not traded the losses. I would have not traded the buys, because for me to be able to buy, this was the only point where I was actually really interested in buying, right? Where I was actually really interested in seeing something happening, because it made sense. We are at an okay point to be buying, because we're still pretty far away from previous day's high, so we can get a good margin to get all the way up here, maybe 4, maybe 5 R, depending on the stop loss. And we've just run below those lows, right? Which again, I don't really like that liquidity, but it is liquidity overall. So yeah, it would have been lovely to see this being traded into, to then look for the lower time frame opportunities to target this. That was my ideal scenario, and the reason for that is because this so we're in the 29th, this is where it closes, this 28th. So previous day's low was all the way down here, right? Okay, never mind. I thought that previous day's low was taken for some reason. When I made the analysis early in the morning, I was like, so previous day's low was taken, so previous day's high made sense to be taken as well. But no, never mind. I don't know why I thought that was taken. Sure, we do get this low, right? Which is a nice way to start the session, right? The kill zone, the London kill zone in this case. But yeah, I mean, being this close and theoretically having a bullish trend, we can expect previous day's highs to be a pretty nice target for us to be buying to. And yeah, this is really the only area, because again, running stops, 5-minute market shift, and displacement, lower time frame doesn't trade into that. There's no opportunity for us to look for lower time frame interest. Then we have this running stops, we have this market shift, again the exact same thing. Fair value gaps down here do not get mitigated. This would have been too high up for me to trade. There's no way that I can place an entry on this, and much less the way that I did it, right? Because we have the first mitigation, price pulls away a lot and then comes back down once again, right? For me, it made no sense, right, to take something like this on paper trading. Plus, it's already after 11, not even after 12, so it just doesn't make sense in any way for me to be risking my capital like that. I prefer to see the entries between 8:30 and 9:30, hopefully before 10. That's my ideal way to be trading, and if I can get hands on a pretty good trade after 10 but before 11, then as well. But again, I don't want to be either selling too low nor buying too high, and much less when the day is pretty much ending, right? So did the stops show up? These steps show up? Yeah, in my opinion, they only did here. And here, let's talk about the losses that I took, because as you can see, price takes previous day's high, aggressive move lower, 5-minute fair value gap. That was the first execution, and the second execution was on the on this. So mitigation of 5-minute fair value gap, right? Which was somewhere around here. Also this 1-minute fair value gap, as you can see. Trade slower, aggressively, market shift already on this low could have been considered, but then we have this better low, or maybe even the low of this 10 bit of a bull bearish candle in there. Price trades below that, fair value gap, entry, stop loss about this high, and that would have been taken there, but my stop loss was all the way up here, and risking a 1% of both, or no, yeah, 1% of both. Reason why I took 2% loss. And then this one was a 0.69 from around here all the way up to this, approximately 2.37. So theoretically, let's actually just check it out. I don't think I even recovered from the loss if I made that little bit of a mistake. Oh, I did. So this is the loss. See, more than 2%, as you can see. This is the 29th. So it took the loss, 645, 889 as a profit, which again makes me recover from the loss and leaves me in a little bit of a profit, which is, it's all right, right? It's a little bit better than nothing. And the target would have been a point as well. So you can see prices now retracing quite aggressively. So yeah, now going on to the conclusion, what I did wrong, what I did right, and everything. I do believe I was in the right to expect a bullish session, right? We've had a pretty aggressive move yesterday, retraced, mitigated the 50% at the very least, so that's great. Then an impulse. We have the 5 steps right here, except, well, the lower time frames didn't give us the opportunity. We had multiple reasons to believe its price was going to be bullish. So in my opinion, I was right on that, and I ended up being right. And target would have been on point. As you can see, previous day's high is what I would have gone for. I'm not sure if I would have targeted anything further than that, because if we look to the left, well, I mean, this is something that we might have been able to target, right? If we wanted to be a little bit more aggressive, as you can see, that would have been a larger target to have. But again, going for previous day's high, if I got a 4R, 5R, whatever it was, it would have been just fine, right? So in my opinion, that's what I did right. Bias and analysis on entries. This was a really good area to look for entries. We didn't get that. And after that, it's one opportunity here and another one on the 50-minute fair value gap, both, in my opinion, too high up, right? And this one, again, would have been a bit complicated, possible, but a bit complicated. What I did wrong, well, if we're talking about paper trading, this was a wrong trade, of course, right? I did think that it could work out, right? Because we do have the run of buy side liquidity, the market shift, and the fair value gap right there, right? So it made sense for us to be trying to sell, but at the same time, price is really, really bullish, right? So we understand why price could actually just continue to go higher from there. Of course, that's not something I would have taken on a challenger paper or a funded account, because it's just really against the trend. For me to be able to sell, I think I would have waited for at least this low to be broken, this low here, right? And then to see some really good confluence to sell from, something like that, right? I don't think I could have sold in any time of the day, and this was just an attempt. Again, paper trading tends to risk much more than usual. So that's what I did wrong. And what to do different? Well, I don't think I would have done anything different from today. Probably could have paid more attention to the 50-minute fair value gap, but again, I had in mind the fact that it didn't really take sell-side liquidity on the 50-minute. If I was to trade an opportunity in that 50-minute fair value gap, was simply because of me following the trend, right? That's the only reason I could have actually tried to buy from this point, right? Because we don't have the run and stops. We do have the displacement and market shift in the 50-minute and the lower time frame and everything, right? But again, if I'm missing step 1, I can't really look for I can't really look for 2, 3, or 5, right? And that's really pretty much it. I think that was fine day without trades, in my opinion. The ones that really, not really worked out, but worked out in some way, were too high up, and there's nothing for me to do. Had a pretty good day, in my opinion, and that's pretty much it. So I hope you enjoyed this video. Hope you took something away from it. I'll be seeing you on to the next one.